what a tear this stock has been on, as you said, up almost 70%. What we're seeing during this run is that individual investors have doubled down on the stock. It is by far the most popular buy among individual investors. That's according to some Vanda research data as of this year. And single day purchases of the stock hit a record this year. So as Tesla recorded one of its worst years on record, you saw individuals say, hey, I'm going to double down. I'm going to buy the dip in Tesla shares. And so far, it's paid off this year.
Autonomous taxi platforms are the convergence of three major innovation platforms: robotics, energy storage, and artificial intelligence. Those are three different S-curves, and they're going to feed one another. So we think it's going to be pretty explosive. As always, in the early days of innovation, it goes slowly until all of a sudden it takes off.
In this video, an information overload, ARK Invest Cathie Wood speculates about what's in store at Tesla Investor Day on Wednesday, the real company producing real trucks that aren't pushers, that didn't have fraudulent statements, that weren't founded by a fraud and a con man and a liar, Nikola, announced that they're fucked and probably going bankrupt relatively soon. No, really. Media and analysts chime in on Tesla and Investor Day, and the how dare Elon have an opinion, Elon's opinions are damaging the Tesla brand narrative collapses in real time. New data proving, beyond a shadow of a doubt, that every single one of the dipshits who thought Elon Musk sharing his opinions was damaging Tesla's brand were wrong. Completely and utterly wrong. And speaking of completely and utterly wrong, if you haven't checked out the super spicy video I dropped on Patreon yesterday, please, I implore you, as long as you don't have a sensitive butt, you're not going to melt, I highly recommend essential viewing for everyone who isn't part of the collective hive mind, aka a mindless drone. If you're not a member of Patreon, you can join with the card in the corner or the link at the pinned comment. A big milestone has just been achieved. There are now over 300 exclusive videos available only on Patreon. So in the lead up to Tesla's Investor Day, Tesla stock today up over 5%, closing $207 per share, market cap just over $650 billion, and still, yes, I'm going to say it, the best risk-adjusted opportunity that I am personally aware of in the stock market. That doesn't mean there aren't better opportunities. In fact, there's probably a load of them. I just don't know about them. Still buying with every spare cent. And still can't believe that Tesla's market cap is only just over $500 billion as we approach March 2023. And I am once again going to take this opportunity to mock and ridicule every single last person who sold Tesla stock near $100 per share recently out of panic. I hope at least one or two of you have learned a lesson. You know, the only thing dumber than panic selling Tesla stock in 2023 around $100 per share, you know what, actually, I don't think there's anything dumber that could possibly have been done in this version of the simulation. But maybe a close second. Yeah, you know what, it is definitely second place. The second dumbest thing anyone could possibly have done in this version of the simulation was to think that Elon Musk sharing some opinions was damaging Tesla's brand. Of course, the people who thought this to be true live in their own echo chambers, and I'm sure among their circle of friends who think exactly the same as they do. When I say think, I actually mean have opinions installed in their brains, because forming them of their own volition requires too much energy and it's too cognitively demanding, so you'd rather just believe what you're hearing from everyone else. The second dumbest thing was to be a member of one of these echo chambers and to genuinely think that Elon Musk was damaging Tesla's brand, that he was no longer an asset to Tesla, but a liability. And here's some fucking facts that don't care about your feelings. Over on Twitter, from Sawyer Merritt. News: Ford loses overall loyalty award to Tesla after a 12-year run. On top of its overall loyalty to make recognition, Tesla scored repeat wins for highest conquest percentage. I'm having flashbacks to my sordid 20s for some reason. I don't know why that would come up when I read that. And, quote, alternative powertrain loyalty to make. The combination of an active return to market consumer base and a majority share of battery electric vehicle sales were contributors to Tesla's loyalty performance this year. However, the brand's resonance with ethnic consumers was a key driver in its recognition of loyalty improvement and diversity retention. The fuck does anything... Why is this even a thing? Why are we talking about ethnic consumers? Who gives a fuck, okay? How about just talking about consumers? What's happening to the world right now? I don't understand. What is this diversity retention bullshit? The point, however, check this out. Manufacturer and Make Loyalty Awards winner. Overall loyalty to manufacturer, Government Motors with an asterisk. I wonder why that would be. Overall loyalty to Make, Tesla. Ethnic market loyalty to Make, Tesla. Most improved Make loyalty, Tesla. Highest conquest percentage, Tesla. Alternative powertrain loyalty to Make, Tesla. So hold up a second. I just want to make sure everyone gets this, okay? Ford has lost the overall loyalty award to Tesla. They've been dethroned by Tesla. Ford won this award 12 years in a row, and they've now been dethroned by Tesla. at the conclusion of 2022, the very year in which Big Bad Elon was sharing too many big bad opinions that were irreparably damaging Tesla's brand, and he was now a liability, not an asset to the company. You fucking idiots. Seriously. I just can't believe how dumb some people are. I pointed out at the time, these dickheads living in an echo chamber think the entire world thinks the way they do. They don't. What clearer indication do we possibly need than something like this? You would think, if the narrative that Big Bad Elon having opinions was damaging Tesla, you would think that rather than Tesla usurping the top position, they would have fallen, right? So can we finally put this idiotic argument to bed? 1. Elon's gonna Elon. 2. Elon Eloning doesn't harm Tesla. He's a massive asset. If you don't like Elon Eloning, you are welcome to the fuck off and not own the stock, and then you've got nothing to complain about. Just saying. Again, Elon ain't gonna stop sharing his opinions, especially on important topics. One final comment on brand destruction. You know whose brand has been destroyed? Every last one of the dumb motherfuckers who claimed that Elon was damaging Tesla's brand. Now, before we get to the hype train regarding Tesla Investor Day and Cathie Wood's latest thoughts around Tesla, autonomy, and her predictions for Tesla Investor Day, it's time for yet another I told you so. It's a good thing I'm comfortable being right. It's time to talk Nikola. The time has come, ladies and gentlemen. It's not like I saw this coming. It's not like I made about 35 independent videos with the too long didn't watch. In each one of these videos being, this company is going bankrupt. Trevor Milton is a con man. They're committing fraud. It's obvious. They're trying their best. The engineers probably think they're working on real products. But Meltdown Milton is a con man. He's a liar. He's a fraud. He's making fraudulent claims, preying on dumb investors on one very far end of the bell curve. And this company will ultimately go bankrupt. It's just a matter of time. Well, that time has come. Quote, substantial doubt. Hydrogen truck faker, did I say that right? Nikola on brink of collapse after racking up $2 billion in losses. The US company warns it may have to, quote, terminate our operations, aka go fucking bankrupt, in the next 12 months after admitting, quote, continuing losses for the foreseeable future. I'm so very shocked. Hydrogen and battery truck maker, computer renderer maker, and cobbler together of other components with other people's technology. Hydrogen and battery truck faker Nikola has warned that it may have to, quote, terminate our operations in the next 12 months after racking up an accumulated deficit of about $2 billion, admitting it expects, quote, continuing losses for the foreseeable future. And it gets better, ladies and gentlemen. Listen to their words. This is an opinion. This is direct from a Nikola filing, okay? Check it out. Quote, we are an early stage company with a history of losses. Expect to incur significant expenses and continuing losses for the foreseeable future. And there is substantial doubt that we will have sufficient funds to satisfy our obligations through the next 12 months from the date of this report. This is a wordy and verbose way of saying we think we're going bankrupt. In fact, we are going bankrupt unless a miracle occurs in the next 12 months. The Delaware-based company admitted in an obligatory 10-K filing to the US Securities and Exchange Commission last Thursday. Quote, we incurred net losses of $784.2 million and $690.4 million for the years ended December 31st, 2022 and 2021 respectively, and have an accumulated deficit of approximately $2 billion from the inception of Nikola Corporation, it explained. Way to out Elon. Quote, we believe that we'll continue to incur operating and net losses each quarter until at least the time we begin to generate significant margin from our trucks, which may not happen. How could anyone see this coming? I mean, bro, I'm shocked. I better go delete those 35-ish videos where I said this company was definitely not going bankrupt. Oh wait, no, I said they were going bankrupt. I better leave them online then for more credibility. Still batting 1,000 bitches. The filing says that the company, whose founding CEO Trevor Milton has been convicted of fraud for lying to investors. Gamblers, not investors. Sorry guys, but like seriously. Anyone who owned Nikola stock at any point was never an investor. An investor does their homework and uses their brain first, then invests second when they have a thesis. Opening wide and deep-throating every single fraudulent statement made by an obvious con man and a liar does not count as investment research. It counts as being a fucking moron. I don't even feel sorry for these people. I mean, I kind of do, but I kind of don't. Kind of like how I wouldn't really feel sorry for somebody who goes and tries to punch a UFC fighter in the face, misses, and then gets knocked out. Probably wasn't the best decision, and if you had done a little bit more thinking first and a little less emoting, you probably would have realized not the best idea. Unless, of course, lying unconscious on the floor is your objective, in which case, bravo, mission accomplished. Has determined, quote, there is substantial doubt that we will have sufficient funds to satisfy our obligations through the next 12 months. Quote, our ability to continue as a going concern is dependent on our ability to obtain the necessary financing to meet our obligations and repay our liabilities arising from the ordinary course of business operations when they become due. In other words, we need to borrow more money, but we may not be able to borrow more money, especially now that everyone knows we're fucked. This is the start of the death spiral. Quote, the outcome of these matters cannot be predicted with any certainty at this time. Well, I'm going to predict with certainty they are going bankrupt. You can fucking count on it. If we are unable to raise sufficient capital when needed, our business, financial condition, and results of operations will be materially and adversely affected, and we will need to significantly modify or terminate our operations and our planned business activities. I mean, it does not get more clear-cut than this, ladies and gentlemen. I did my best. Dozens upon dozens of videos pointing out this obvious fraud of a company and their ultimate demise. Nikola explains it is working hard to obtain, quote, the required funding for future operations in 3 ways. Through an equity distribution agreement, i.e. allowing a third party to distribute shares within the shitty group investment bank. A second common stock purchase agreement, i.e. the sale of more shares, diluting existing shareholders. I mean, if there's anyone still holding the stock, what the fuck? With investment firm Tombstone Capital. I'll tell you what, man, that's close enough to Tombstone Capital. Rather fitting. And the sale of additional unsecured senior convertible notes to existing investors, if they're dumb enough to actually, come on, bro. Owners of senior convertible notes get priority in repayment over holders of other kinds of debt. Nice typo there. In the event of bankruptcy, but if the company does well, the owners can convert their notes into valuable shares. Keyword there, if. But the company's share price has tanked, trading at $2.22 at time of publication from... Fucking hell, dude. I don't even feel sorry for these people, honestly. Hopefully the lesson has been learned. Nikola stock currently $2.22. Down from a high of $65.90 in June 2020. Securing this additional funding, quote, cannot be assured, it admits. Quote, however, the ability to access the equity distribution agreement and second common stock purchase agreement are dependent on our common stock trading volumes and the market price of our common stock, which cannot be assured, and as a result cannot be included as sources of liquidity in our analysis. And it adds, quote, our potential future profitability is dependent upon the successful development and successful commercial introduction and acceptance of our trucks and a hydrogen station platform, which may not occur. Okay, you know what this paragraph is? A bit of a word salad, but you know what it says? Our potential future profitability, as in this thing that isn't currently happening, that could potentially, maybe, possibly happen in the future, is dependent upon us completing multiple back-to-back miracles, successful development, and successful commercial introduction, as in scaling up production, doing so profitably, actually making these things and delivering to customers, acceptance of our trucks, as in people actually wanting to buy them, the price, the performance, I mean, if they don't stack up, no one's dumb enough to buy them, and the successful introduction and acceptance of our hydrogen station platform, all of which may not occur. The filing then sets out the company's plans for growth, which basically consists of manufacturing and selling its trucks and developing and deploying hydrogen fueling stations. Quote, because we incur the cost and expense from these efforts and other efforts before we receive any incremental revenue with respect thereto, our losses in future periods will be significant, it explains. Quote, in addition, these efforts have and may continue to be more expensive than we currently anticipate, and these efforts may not result in sufficient revenue if customers do not purchase or lease our trucks in sufficient volume, which would further increase our losses. The company goes on to make 25 pages of further warnings. I mean, can we just take a moment to let this one sink in? 25 pages of further warnings. Here's a few key highlights. Quote, we may be unable to adequately control the costs associated with our operations. Our business model has yet to be tested, and any failure to commercialize our strategic plans would have an adverse effect on our operating results and business, harm our reputation, and could result in substantial liabilities that exceed our resources. Any investment in our company is therefore highly speculative and could result in the loss of your entire investment. Just think for a moment. Nikola needs to raise capital. Who in their right fucking mind is going to lend money to this company who have literally just said any investment in our company is therefore highly speculative and could result in the loss of your entire investment? I mean, there is a sucker born every minute, so who knows? Our limited operating history makes evaluating our business and future prospects difficult and may increase the risk of your investment. There are no assurances that we will be able to secure future business with the major trucking companies or with independent truck drivers. It is difficult to predict our future revenue and appropriately budget for our expenses. Someone should have told that to Trevor Meltdown Milton a few years ago when he was out there overestimating future revenue and profitability and everything else. And we have limited insight into trends that may emerge and affect our business. Quote, we will need to raise additional funds and these funds may not be available to us when we need them. If the market for our battery electric vehicle and fuel cell electric vehicle trucks do not develop at the rate or the extent that we expect, our business, prospects, financial condition, and operating results will be harmed. By the way, we can sum up every single one of these points as we're probably going bankrupt. Yeah, we're kind of f***ed. Yeah, in fact, we are f***ed. We're definitely going bankrupt. Rest in peace, everyone who bought our stock. The market for alternative fuel and electric trucks is new and untested and is characterized by rapidly changing technologies, price competition, numerous competitors or potential competitors, evolving government regulation and industry standards, and uncertain customer demands and behaviors. If we fail to manage our future growth effectively, we may not be able to market and sell our vehicles successfully. Unfavorable publicity I guess this video counts, right? Or a failure to respond effectively to adverse publicity could harm our reputation and adversely affect our business. On top of all of that, the filing also adds that the company faces, quote, risks and uncertainties related to litigation, regulatory actions, and government investigations and inquiries. Quote, we are subject to and are and may in the future become a party to a variety of litigation, other claims, suits, regulatory actions, and government investigations and inquiries, it explains, pointing to the conviction of former CEO Trevor Meltdown Milton for securities fraud and wire fraud after being exposed by Hindenburg Research. Rest in fucking peace. I'm very shocked. I did not see this coming, and there are not dozens of videos on this very YouTube channel indicating that I did in fact see this coming and said so in unequivocal terms. The bell curve is real. And now on to some discussion in the mainstream finance media and among some Wall Street stock analysts regarding Tesla's Investor Day 2023, which is happening on Wednesday. After that, some thoughts from Cathie Wood.
Also, the EV space, one we're tracking closely, as you know, celebrating some big wins this morning. Tesla announced higher than expected production levels out of their Berlin plant. With more, we've got Yahoo Finance's Praz Subramanian tracking all the deets there. Praz, what do we know so far?
Yeah, it's a big milestone for Tesla in Berlin, 4,000 EVs a week. They hit that milestone a couple weeks ago, according to Reuters, ahead of their planned timing for that, which is nice to see. That's going to be around 200,000 a year in terms of annual output if they can get that. Now, theoretically, that plant can do 500,000 a week or 500,000 a year, 10,000 a week, which is a lot of numbers there, but they're not quite there yet. So some ways to go. Now, it's not all good news here because Tesla had to shift battery. They want to ship battery production to the U.S. because of the IRA. So they're not going to do that in Germany, but they'll build the cars there. But good news nonetheless, because, you know, Musk once called these new factories like Giga Berlin, Giga Austin, money furnaces, right? So maybe finally trying to get some value out of that after the huge kind of investments into those two new factories.
Yeah, and a major investment within the past 2 years that we've seen into China as well, Giga China.
Excellent progress from Tesla. Annualized rate of production at Berlin now, over 200,000 vehicles per year. For context, just remember, every time you hear an EV maker, some of Tesla's so-called competition, discussing their production targets, their production capacity, compare this and contrast this with Tesla, ramping a single factory in Berlin, which has had a lot of hiccups. There were delays, they're shipping 4680s. It's an absolute clusterfuck, bunch of bureaucracy and red tape that have been slowed down. Yet still, already, 4,000 vehicles per week. You know how many vehicles Lucid is aiming to deliver in the full year of 2023? 10,000 or so. Tesla, in a new factory, still ramping up, in less than a month, produces more vehicles than Lucid is aiming for the entire fucking year. And Ford, who after some recalls and some battery issues have halted production on their F-150 electric Lightning, go check out how many of those they're producing annually. It's a joke. But don't forget, the competition is coming all over itself.
Tesla will hold its Investor Day on Wednesday in its Gigafactory in Austin, Texas. Yahoo Finance's Praz Subramanian has the details. Praz, lay it out for us.
Yeah, Jared, 4 o'clock Eastern on Wednesday, so during the show, of course. But yeah, we're watching a few things here that I wrote about here. A couple things, first of all, long-term expansion plans. You know, Tesla talking about how they want to make 20 million cars by 2030. How are you going to do that? You're going to need about 12 factories, what Elon Musk is saying. So maybe we'll hear something on Tesla Mexico, Tesla Canada, Tesla Indonesia. We'll see. That could be coming up. Also, the Gen 3 platform. That's the cheaper car potentially that would cost $25,000 to $30,000. Maybe it could be a robo-taxi that Musk has mentioned before in the past. When is that coming? When can they make that? How efficiently and cheaply can they make that car? That's another question people will be asking. And finally, that master plan part 3 that Musk has also teased. We're going to include it's going to include part of that expansion plan, the Gen 3 car, but also clean energy. You know, what are the solar plans for Tesla? Are they going to revamp the offering? And they paused some of those solar installations. Are they going to go back and do those in commercial and residential applications, and also battery storage, power packs, the power wall for the home? We're going to hear more about that, more installations, maybe a new product offering, better tech, and also minerals. How are they going to get lithium and cobalt, things like that for a lot of these batteries?
Sounds like a lot of news that we will be gathering from you in a couple days here, but
yeah.
Got to give credit here to Praz. I mean, like, for real. Most of his colleagues on Yahoo Finance are brain dead and don't know what they're talking about. Praz gets it. Not only does he get it, but he really gets it. So credit where it's due. Praz, a beacon of reason among a sea of stupidity. I swear this guy's eventually going to move to YouTube and start his own thing. He's too smart to be working over at Yahoo Finance. Everything he said, all the speculation, spot on. It's almost as if he's been watching YouTube.
Tesla investors are on the edge of their seats as they await Tesla's investor event. Yahoo Finance's Praz Subramanian has the details for us. Praz.
Hey, Ray. What's up, man? So, 3 things to watch. The main things I think are kind of long-term expansion plans. We're talking about how Musk wants to build 30 20 million cars by 2030, a run rate there. So we're going to need, he said, about 12 factories. So we'll hear about potentially a Mexico factory that could become, an announcement could come imminently, possibly that day. The Gen 3 platform, that cheap Tesla car. Tesla said they will reveal that platform at the meeting on Wednesday. Is it the robotaxi, the car that will kind of actually fulfill the mission of fleet operators that can actually send these cars everywhere and you can use it when you're not actually driving it? We'll see. That'll be around sub $25,000, $30,000 car. And finally, that master plan part 3, right? So that wraps in a lot of that long-term expansion plans, the cheap car, but also it's talking about fully sustainable future for Earth, right? So what does that mean? We're going to hear about possibly solar installations, a race for both commercial and residential. They paused these installations recently. So the question is why? Is it a new product offering? Why are they going to come back? What's going to happen there? And how do you store all the energy, right? Batteries. So new power walls for the home, new mega packs for commercial and utilities to use to store energy that comes from the sun. Probably hear more about that. And also minerals for batteries, how they're going to make cheaper batteries, more efficient batteries for cars and both installations like mega packs.
So a lot in there. I guess my question is, how should we view this meeting? In other words, when Musk has come out with the master plans before, the spirit of them has been realized to some extent, even if like the details have been delayed or whatever. So how should investors be making decisions based on what we're going to hear on Wednesday?
Well, I think the big thing is going to be that Gen 3 platform, that new car. Are we going to see that car? Are we going to hear about how economical it is to make, new technologies? How soon will it come out, actually? Is it going to be next year or 2 years from now? You know, I think Gene Munster said, you take what Musk says and add 2 years to it, to when you're actually going to see it. So the question is, are investors going to believe that story? Is that, how soon is that new car going to come out and things like that?
You know, one thing that investors, of course, continue to ask any Tesla management, and especially Elon Musk, about is how he's spending his time. And of course, the elephant in the room is where else his time is going, and that's at Twitter right now. Did you expect any Q&A session to be happening at this Investor Day where that question may come up?
Tell you what, if someone's dumb enough to ask this question at the Investor Day, I cannot wait for the response. This is a very simple matter to me. The metric that matters is results. The method is irrelevant. The results are the only thing that matters. Has Tesla begun to slow down their production ramps since Elon acquired Twitter? Have they started to reverse some of their innovations in manufacturing? No. As we saw earlier in this video, they've just dethroned Ford in terms of loyalty. I mean, Tesla's competition suddenly started selling through their production and not having recalls and not holding production and not having battery issues and not having to incentivize consumers with discounts to buy their vehicles. As Tesla's fleet of 3.5 million robots collecting data to train their autonomous software suddenly vanished from roads, I very much look forward to seeing if anyone's dumb enough to ask this question out loud at Tesla Investor Day. Perception versus reality. Results are what matters.
You know, there's no guidance as to whether that will actually happen, but usually they've taken questions at these events before, and they might, and I think it will come up for sure. It's such a huge topic for Elon fans and also Elon critics. You know, I'm going to add a little wrinkle here. I was just thinking about this today, and I think it's perhaps possible we may hear something with a succession plan, right? Like, who is next in line? Who are some of the lieutenants that are there that Musk relies on that potentially could be stepping in his place if he is choosing to go to SpaceX or whatever he wants to do in the future? I'm not saying it's going to happen, but it's a potential wrinkle that might be asked about, and he might give some indication as to what he's thinking about that. So maybe that will help people kind of assuage some fears about, you know, I think Tesla, the company has a pretty deep bench. They're able to perform even without Musk at 100% focus, right? So I think there's a lot of focus on Musk not being there. I think that might be misplaced.
Bro, Praz is spitting facts. It is misplaced. Dude, mad respect. Somebody in the mainstream finance media who knows what the they're talking about when it comes to Tesla. I mean, bro, credit where it's due here.
Yes, it's nice to have him there, but he is sort of everywhere. So the question is, how fully committed is he, and is it really necessary for him to be there all the time?
Well, and another way he's spending his time is with SpaceX, by the way. We should mention that too, because there was just a delay of a planned NASA launch with SpaceX. And isn't this also the first meeting where he's going to be talking about some of his other portfolio companies like SpaceX? Like SpaceX,
like Boring Company,
right.
Like how the umbrella of all these companies work together. He's talked about this before with Boring Company. We're going to have this tunnel where the cars are going to go through, and it's okay. Is it happening? How efficient is it to send a car through a tunnel on a rolling sort of chassis? So I think he did mention that there is a unifying theory or plan amongst all these companies. So we'll hear about that.
From Yahoo to CNBS.
To Tesla, the stock is revving up. Shares rallying over 5% today, bringing its gains to an astonishing 68% for the year. And it's only February. The EV maker is holding its investor day on Wednesday at its Gigafactory in Austin. So what role are options and retail investors playing in this big run? Before we get to that, Tim, what are we expecting, do you think? I mean, we could be getting updates on its battery tech, 4680 battery technology, operating margins, a cheaper model.
Well, there are things that will move the needle to the upside, and the risk reward to me we'll get to. But I think the things that would be the excitement and the fireworks are certainly around a Model 2, which was the affordable, the mass market car, really, that would be the global car, battery dynamics, and then even some update on China. I think the China demand thing has been very misunderstood at times because China has been down. There's been some sense, or demand or backlogs have been down. There's been some sense that China demand has fallen off the charts. But I mean, the stocks rallied massively.
Yeah, and its volumes are, I mean, the discounts, Mike, have really worked.
Imagine that. Lower prices means more people can afford to buy Teslas, means more people buy Teslas. It's fucking amazing. Oh my God. Someone should have made a plan about doing that and put it on a website back in 2006. Oh wait, they did that.
Well, yeah, I mean, that's the interesting thing. We talk about a global car, a value price car. The interesting thing is that now that they've discounted the prices and we are seeing, their eligibility for that federal tax credit return, the Model 3, which is their current entry-level car, actually is quite competitive with the average car price sold in the United States right now. You're not talking about an immensely expensive car if you're talking about that one. Obviously, you get up to the Model S Plaid and things like that. That's a much more expensive vehicle. But the car maker is accessible to, we'll call it average to upper middle class households if they're interested in buying one. But I will also say that there's inventory build, and I can see it on the lots.
Let's get more now from CNBC contributor Gunjan Banerjee. She is the lead writer for the Wall Street Journal's live markets coverage. Gunjan, great to have you with us. You've written about Tesla extensively for the year, and the boom in options has been just astronomical. The role of the retail investor, though, in this ramp up has been pronounced, hasn't it?
So true, Melissa. And what a tear this stock has been on, as you said, up almost 70%. We're seeing during this run is that individual investors have doubled down on the stock. It is by far the most popular buy among individual investors. That's according to some Vanda research data as of this year. And single day purchases of the stock hit a record this year. So as Tesla recorded one of its worst years on record, you saw individuals say, hey, I'm going to double down. I'm going to buy the dip in Tesla shares. And so far, it's paid off this year.
Now that is quite the understatement. Interestingly, retail investors, number one purchase, Tesla stock. That means that retail investors were buying Tesla stock from institutional investors who were the dipshits selling Tesla stock near 2-year lows around $100 per share. Think about that for a moment, ladies and gentlemen. The big brain institutional investors who would smoke just about everyone watching on an IQ test were the same dipshits dumping Tesla stock, selling it to us retail investors for massive discounts. The institutional investment world is a fucking clown show. Herd mentality, groupthink, oh my God, it's going down, we have to sell growth stocks, right? Because that's what we do. All right, rates are going up, sell growth stocks, okay, let's sell Tesla. I mean, seriously, I pointed out that Tesla's forward PE became cheaper than Pepsi, Coke, and Chipotle, and continued to go lower. It made absolutely no sense. And this is one of the biggest mistakes in my own thesis. I thought these so-called big brain institutional investors at some point, even if they didn't like Tesla around 400 or 300 per share, would step in when the valuation started to become so absurdly cheap it just defied logic. But nope, they kept on selling and selling and selling and selling and selling. Now I understand there is a little bit of seasonality. Many of these big institutions wanted to dump their holdings in Tesla stock so they could have a clean start to 2023. I get that. But that's no excuse for selling Tesla stock at absurdly low prices. Can you imagine being an institutional investor who did sell Tesla stock in the $100 per share range?
In terms of the activity going to the investor meeting, I would imagine, like so many investors out there, they're expecting that Elon Musk will have some sort of rabbit to pull out of the hat. Regardless of how many rabbits or the size of the rabbit,
he's always got one.
He's always a rabbit. Right?
He's a couple.
And so the expectation is a run up into the event, and then it's a sell the news event. I mean, I think that's sort of the consensus at this point. Is that what you are seeing in the options market?
What was really fascinating today, while the stock jumped, 5-6%, is a lot of the most popular trades were those tied to the stock jumping even more through Friday. These were 220 calls, 225 calls. So that shows you that many investors were turning to the options market to bet on a continued rally in Tesla shares. And let's not forget, Tesla calls have been one of the most popular trades in the entire options market. Tesla options, that market has just grown tremendously this year. People have spent more than $500 billion on Tesla options over the past year, making it the most popular option in the entire market. And that was certainly on display today while the stock was ripping higher.
Especially while shorts are down, $7.5 billion in this calendar year, depending on how you're measuring that. But I mean, that's the other side of this. It's been a painful place for the shorts. Yeah.
Definitely. After a rare win for the shorts last year, that seemed to be short-lived for sure.
I mean, this seems almost, obviously Tesla's way too big to be one, but it seems almost like a meme stock. I'm just wondering, Gunjan, when you talk to people and you're reporting, does the opinion of investors of the durability of Tesla's rally, does it change at all, knowing that there's such a fervent retail base?
Yeah, I think that's what makes it such a tough stock for individual and institutional traders to value, right? And that's what made it such a painful short, because I do think many bearish investors underestimated that passionate camp. And what I hear from investors I speak with is, hey, this is the next Apple. The Tesla car is like the iPhone, and I'm not selling, even though the stock had its worst year on record. So I think that makes it a very, very tricky trade for many institutional investors.
She's hit the nail on the head here. By the way, more credit where it's due. Another person in the mainstream finance media who actually knows what the they're talking about when it comes to Tesla. And the key word there, a tricky trade for institutional investors. It sure is. If you're going into the stocks casino, especially when it comes to Tesla, you are asking for trouble. While it certainly is a tricky trade, if you exit the stocks casino and have a long-term investment horizon rather than a trader mentality, I swear, it's literally the easiest stock for a long-term investor on earth. I would be willing to make the bet that if an individual, were to buy Tesla stock today and enter a 10-year coma, upon awakening, a decade from now, they'll be much better off than any self-proclaimed geniuses who thought it would be an idea to trade in and out of Tesla stock over that decade. What's that saying? Complexity appeals to stupid people? It's really not that hard to buy, hold, and just leave it alone. I have not sold a share of Tesla stock since I began purchasing at the beginning of 2016. Not one share, which is the exact number of regrets I have regarding Tesla stock. None. I've been purchasing with every spare cent now for the last 7 years. Approaching a decade. No trading at all. Just buying. So far, it's worked out okay.
But it's part of what makes so many individual investors very enthusiastic about the stock, because they have this community of traders that's kind of having diamond hands alongside them.
Gunjan, thank you. Great to have you with us.
Thank you.
Gunjan Banerjee of the Wall Street Journal. Guy, does it change your view? I mean, not only is there a really loyal and fervent retail shareholder base, but S&P Global Mobility had a survey out showing that its owners, Tesla owners, are extremely loyal, and that whatever brand damage Elon Musk has done with his escapades over the past year, let's put it that way, may have been overcome at this point.
Well, maybe no brand damage was done.
Yeah, I mean, there's no doubt that their current owners are loyal, but what they need are new owners, right? They need to continue to grow. It's a $650 billion company, and the loyalty that people have had to the stock, well, they were loyal on the way from where the stock traded up to $450 or so in November of 21 down to $100. I mean, that tested their loyalty, and the stock, even with this 100% run, is still 50% or so from its all-time high. So keep things in perspective here. 225 was the moving average. 200-day, we got up to there. Again, I'm more of the camp that we sort of gravitate back down towards 165, which is a 50% or so retracement from this move, and we'll see.
Yeah, I think the technicals and momentum that you're referring to, Guy, are really what are going to lead the trading in the stock. And, it's an age-old question whether or not valuation matters. And I would say it does unless you're trading Tesla or the meme stocks, right? Like those seem to be absent of valuation in terms of, the investing decisions that are going in from the retail.
So I just want to take a moment here. These comments reveal a certain perception that those in the finance media potentially have about Tesla retail investors, which is we don't know what the f*** we're doing. We do not know anything about valuation. We do not know how to value an automotive company. We're just buying because we like Tesla, because stonks always go up. Believe it or not, Many Tesla retail stock investors are some of the smartest, most intelligent, well-researched investors out there who've built their own comprehensive valuation models. Many of these retail investors have done the thinking for themselves rather than reasoned by analogy. Go, okay, how many cars does a car company, what's the gross margin? Okay, that goes there, this goes there, that's a car company, okay, valuation's too high. The Tesla retail investors instead have actually used their own brains instead of analogies. Most of you will know my Tesla valuation model is available exclusively on Patreon to supporters at the investor level and above. I have a range of probabilities, some different scenarios, and what I believe to be fair value based on the numbers in those scenarios. These produce my price targets. None of my price targets are predictions of what the stock's going to be worth. Again, as I said, they're outputs from my probabilistic valuation model. There's no predictions in there. They're just numbers. The difference is, the numbers in my valuation model are rather different to those in a typical Wall Street analyst model, if they've even got one. There's still supposedly reputable investment firms on Wall Street today who think Tesla's going to be selling at most 6 million electric vehicles in 2030. Some of these same morons think that 20 to 30% of the new vehicle market in 2030 will be electric. I'm not sure what the they think the other 70-80% is going to be, because there ain't going to be another 70 to 80%. So, common criticism, Tesla retail investors, they're emotional, they don't understand anything about valuation. They're just emotional investors. Tesla's a gigantic meme stock. People just buy it because it's Tesla. Now, in truth, there's plenty of investors out there like that. But the same is true of just about every stock. But this is a common misconception. I think most folks in the investment community, the traditional investment community, think almost every single Tesla retail investor is a deluded Tesla fanboy or fangirl who doesn't know anything about anything and just goes, well, Tesla's going to the moon, so I'm going to buy it. Each to their own. But I'm going to say it. I think Tesla retail investors are actually some of the smartest retail investors on planet Earth. Some of the most well-informed, well-researched. Or maybe we're all deluded and just see things that aren't really there. Only time will tell. And now ARK Invest's Cathie Wood has some thoughts.
AI is really the mover and shaker here. It is going to catalyze more innovation because it's at the heart of the convergence between and among technologies. So autonomous taxi platforms, and I know Tesla's going to be talking probably a lot more about this now at its March 1 Analyst Day. Autonomous taxi platforms are the convergence of three major innovation platforms: robotics, energy storage, and artificial intelligence. Those are three different S-curves, and they're going to feed one another. So we think it's going to be pretty explosive.
Explosive, huh? I think she might be onto something here.
They have proprietary data, including Tesla, like billions upon billions of miles of real-world driving data that nobody else has. Most of our companies are going to be sleepers because of that proprietary data. When you think of Tesla now, do you wish you could have owned more over the years? You wish you could have held on to, I mean, it's already such a winner. It's a decisive winner for so much of your benchmarks. Yes, it's actually the only stock that is in a benchmark, really, in terms of our flagship. Maybe Zoom, there are 10 basis points in the S&P 500. Do we wish? No, we have. We've been criticized for owning too much, actually, and it has been our largest position for the most part for years. So our conviction remains very high. One of the reasons we do sell as it moves above 10% in the various strategies is that gives us the psychological wherewithal after we've taken profits to buy when it is falling to 100, which it did not too long ago. So that's part of our trading around opportunities that volatility gives us. How are you thinking about competition that's come online in the last 12 months? Yeah, we're very interested in the news coming out of this March 1st day. And we think it will be about robo-taxis effectively. Elon has said that he believes that he'll be able to cut the price of a car in half. We think that a robo-taxi could start at $25,000, and if you've got tax credits, that to take you into the high teens. It's going to be very difficult for the competition to beat that. In fact, they won't be able to come anywhere near it, given their current battery technology.
Some important points here. One, if Tesla can release a vehicle around the $25,000 mark and it gets a $7,500 tax credit, it's not even $20,000 to the consumer who's actually purchasing it after the credit. Bananas. Importantly, however, Cathie Wood unequivocally pointing out that Tesla's competition cannot compete, will not be able to compete. They are
And
so not just the dealer network, not just their marketing costs,
no,
just the battery.
The battery is critical, and Elon's riding down the consumer electronics battery curve. Other automakers chose a different curve that was higher cost to begin with. So they're riding down a curve. But Elon, because he's innovating in battery technology, and we'll hear more about that as well, is we believe 3 to 4 years ahead of the competition, which means for the same power and range, another company, if they wanted to price at the same level as Tesla, will have to lose money, especially if he cuts prices in half.
So I think what Cathie Wood just said is Tesla has won the decade and all of the so-called competition is unequivocally f***ed.
Well, so if they're so ahead of competition, why does he have to cut prices?
This is the beauty of innovation. He's following a learning curve. There's the drive train is following a learning curve. And for every cumulative doubling in the number of vehicles produced globally, costs decline 28%. So he's passing them along. As you'll notice, as prices have come down, his margins have gone up. He's enjoying economies of scale. And we do believe that margins for Tesla are going to become explosive with autonomous mobility.
Well, that's the other knock against your call, which is the robo-taxi thing hasn't happened. And when it comes to autonomous leadership, Tesla itself last week had to recall hundreds of thousands of vehicles because of their, they recognized the NHTSA safety report that they've been mismarketing their self-driving feature.
So just think about that, recall. So quick over-the-air software update. I mean, that's a lot different, right?
There are a few things I enjoy more than watching a hive mind drone have a 404 error when presented with some logic. Card-carrying member of the fake news. What about the recall? Hundreds of thousands of vehicles, oh my god! Cathie Wood's like, it's an over-the-air update, you dipshit. By the way, I'm going to replay this again. Listen how long it takes for her to respond. There's a 404 error, and after a few seconds, while Cathie's talking, she's been processing, she's just been, oh, it's still bad though. Listen carefully.
When it comes to autonomous leadership, Tesla itself last week had to recall hundreds of thousands of vehicles because of their, they recognized the NHTSA safety report that they've been mismarketing their self-driving feature.
So just think about that, recall. So quick over-the-air software update. I mean, that's a lot different, right? And the first point, autonomous has
not
been
great though.
But over-the-air software done. You didn't have to waste time taking your car into the dealer and so forth. In terms of autonomous, we believe that Tesla will launch a national service. That's what all the robots that we're driving right now have been doing for the past 5, 6, 7 years, is collecting data so that he will be able to do that. He and Tesla and the broader team. This is not just about Elon, of course. And autonomous is proven out already, not by Tesla yet, but by Cruise Automation, which is GM's subsidiary. And they were able to launch in 90 days what it took them 9 years in San Francisco. They launched in Austin and Arizona within 90 days. So as always, in the early days of innovation, it goes slowly until all of a sudden it takes off.
Cathie Wood on point, fuddy CNBS anchor, not so much. Really a dull moment around these parts. So just to recap, despite Elon Musk's big bad billionaire opinions destroying Tesla's brand, somehow Tesla has dethroned Ford, who previously held the brand loyalty position for like 12 years in a row. Good thing we managed to remove Elon Musk as the techno king of Tesla and stop him sharing his opinions. Oh wait, neither of those things happened. Nikola warned that they're headed for imminent bankruptcy. So surprised, I definitely didn't see this coming or predict it years ago. Some surprisingly well-informed folks in the mainstream finance media, but as we saw, there are still a few airheads in the mainstream finance media who have no idea what they're talking about and just want to talk smack about Tesla. Beautiful to see that 404 error happen in real time. What about the recall, Cathie Wood, the recall? Nothing I love to see more than an idiot getting owned in a very low-key and subtle manner. I'm not sure the name of the anchor on CNBS who got owned there. I probably should by this point. I've seen her say some dumb shit in the past. I just obviously don't pay attention. But I do have some advice for her if anyone knows, who's listening, who's in touch with her. I highly recommend if she wishes to self-immolate less often and know what the f*** she's talking about more often, a good starting point would be to make sure she's doing everything possible to optimize her health, energy, well-being, and recovery. And a good starting point would be Athletic Greens AG1. One scoop, once a day, every day will have you feeling and performing your best, and I do speak from personal experience. Most of you guys and girls will have heard the spiel by now, but some of you are still holding out, inexplicably. There's a 90-day money-back guarantee, plus you get a 1-year free supply of vitamin D3 and K2 by heading to athleticgreens.com/SMR or using the link in the pinned comment. But Don't take my word for it, take your word for it. Thanks for all the AG1 pumps. Seriously, I finally bought it about a month ago and have been taking it every morning since, and I cannot stress enough how amazing I feel. I've been drinking AG1 since early January and my fatigue has dramatically decreased and my energy, but possibly more importantly, my motivation has increased. After taking AG1 for about 45 days, I honestly can't remember feeling this well, both physically and mentally, ever. Completely agree with the feedback others left on AG1. Been taking it for just over a month and feel amazing. I'm working out harder, feel less mind fog, feel sharper, and it's also helped with my afternoon drop off in energy. Athletic Greens really works and also will keep you as regular as clockwork. My wife and I have been on AG1 this month of February. Increased appetite, age mid-80s. And off blood thinners now, improved attitude and memory as well. Now I can't say for sure if this anchor were to start taking Athletic Greens AG1 every day that she'll stop saying dumb shit about Tesla, but it's worth a try. With a 90-day money-back guarantee, nothing to lose and potentially a lot to gain. Athletic Greens AG1 is a great way to fill in nutritional gaps and get 75 high-quality vitamins, minerals and whole food source nutrients, plus prebiotics, probiotics and digestive enzymes to help with mood, energy, immunity, recovery and more. Head to athleticgreens.com/SMR or use the link in the pinned comment. Start your health habit today and get your free 1-year supply of vitamin D3 and K2. And if you think you can handle it, head over to Patreon. We've now surpassed 300 exclusive videos, many of them far too spicy and controversial for YouTube. You can join Patreon with the card in the corner or the link in the pinned comment, and I'll see you over there. Love ya.